Yo, if you guys catch me wearing a hoodie, just know I'm having a bad hair day. But so here's the update on the free course that I made. Just recorded all the content, it's already done. So that's gonna be out in probably 2 to 3 days. You guys are gonna be able to have full access for 100% free. I'm really stoked about this because I really haven't updated stuff for about 6 months, and the cool thing about this is it's free updated information that you guys are gonna have access to. So really excited about that, just to like give you guys some value. And I'm not trying to upsell you on anything, like just get that course, it's free. You guys literally can go to the link when it's out, create an account, and then you have instant access. No credit card, no debit card is needed at all. But I wanted to go over something with you guys in this video. This is something more new. I want to introduce you guys to indices like the Dow Jones, the S&P 500, the NASDAQ. These are, I've been trading a lot of indices lately, and I just love the markets because they're so volatile, they move so quickly. And really I've noticed with one specific indice, the NASDAQ, that's what I really fully focus on, is it's so predictable. I'm always looking at the technicals on the NASDAQ, and it's really easy to actually see when it's gonna go up, when it's gonna go down. Like if a certain candle opens or closes a certain way, then it's gonna give you a ton of confirmation. But I'm gonna kind of like reveal a little bit of what I've been doing with the NASDAQ, that strategy. But guys, I'm gonna see you in just a second. Stay tuned because this video is super informative and it's gonna help so many of you out. Let's get it. All right guys, it's go time. If you guys don't already use TradingView, I would do this. So when I'm doing like my analysis, looking at the charts and everything, I'm actually looking at TradingView to overall get an overall bias on the market, whether I'm going to go long, whether I'm going to go short, stuff like that. And sorry guys, my phone is blowing up right now. I have so many things going on. Okay, I got a call in 30 minutes, so we got to keep this real good, and we're going to get straight to the point. So with indices, these are the top 3 indices I personally look at. Right here we have the Dow Jones, the US 30, we have NAS 100, the NASDAQ, then we have the S&P 500. I really never have traded the S&P 500. Really, I love the NASDAQ. I really was trading US 30 a lot. Look at, you guys can see, I'm telling you, it's super volatile. Look at how it's moving right now within that 5-minute candle that opened 2 minutes ago. Boom, look at, I'm gonna show you guys right now. That one 5-minute candle probably went up like 100 pips. 150 pips. It went up 150 pips, and it went up 150 pips in a matter of 2 minutes. Isn't that fucking crazy? You couldn't even see a move on a forex pair moving 150 pips in pretty much a day. Like that's kind of rare for forex pairs, but I'm telling you, like indices are super volatile. So like I said, I used to trade the Dow Jones a lot, US 30. I really liked it, but you guys need to realize that you can see the 500 here on the S&P 500, then we have the 100 on the NAS 100, then US 30. So really the S&P 500 is consistent of the 500 most credible companies in America. The NASDAQ is the top 100 companies, and US 30, the Dow Jones, is the top 30 companies. So really this is something that you guys need to keep into consideration. Is with US 30, it's 30 companies. So let's say one of the companies in the Dow Jones has like a major effect, like their business isn't doing good and their stock goes down or whatever. That's going to affect it very greatly, the market of the US or the Dow Jones, the US 30. Now the NAS 100, the NASDAQ, is consistent of 100 companies. So really there aren't too many big moves that happen because like out of nowhere, I should say, because it's consistent of 100 companies, and the S&P 500 is consistent of 500 companies. So I really just like the NASDAQ. I've been studying it for so long, and with me as a trader, I really don't follow fundamentals too much. I do sometimes overall see if any news is coming out. I keep updated on that stuff, but I'm really a technical trader. I love looking at the markets, understanding when it's going to be a good long position, a good short position. Right here, you guys can see, I'm going to highlight a couple of patterns for you guys just so you guys can understand. So I want you guys to see right here, we have all these candles right here, and we have these wicks to the top. Wick, wick, wick. And then we have this one right here, this last candle right there, shooting star candle with the wick to the top. So I don't know if you guys have heard of this in the past, what I've said, but wicks to the top, it's going to drop. Wicks to the bottom, it's going to go up. So we had all these wicks to the top giving us confirmation that Like the market's going to drop at some point. And then right after that, I want you guys to notice, this is why it's so crucial to be looking at the times when the candles are going to open, when they're going to close, to give you confirmation on what's going to happen next. So right after that candle close, immediately it dropped. For the next 10 minutes, the market dropped 955 pips. 955 pips, guys. Isn't that crazy? If you're using a 10-cent lot, you would have made $950 just off that move in 10 minutes. And let's look at the risk. Obviously, we always want a higher reward than risk. So our risk would have been 239 pips. So if you're using a 10-cent lot, you would have been risking $239 to a reward of $950 plus. So the same thing happened recently. Look right here. We have this spinning top, this bullish spinning top. Wicks to the bottom, it's going to go up. And that's exactly what happened. Look at what happened after that. The next two candles for the next 10 minutes went up 477 pips in a matter of 10 minutes. So honestly, when I'm trading indices, like there's two ways of doing this. If you're scalping indices, I'm using higher time frames, or I'm using bigger lot sizes, because when you're on lower time frames like this, the points of support and resistance are much smaller, versus if we're on the daily time frame, they're much bigger, as you guys can see. So from the opening of this candle right here, or let's go from this last candle, the low of the day was 1,598 pips. Okay, so that's like a really stop loss level to have. Obviously, if we're like going long or short, we want to have our support. If we're going long, we want to have our support at the or stop loss at the previous candle. Excuse me, guys, my head's all over the place. I'm going crazy right now. So if we're going long on a trade, usually we're looking at the previous candle to get our stop loss. And then if we're going short on a trade, we're looking at the previous candle's resistance to get our stop loss. Okay? So when we're using higher time frames like this, I'm usually using smaller lots, like a 0.02, a 0.03, because you have to realize that indices are super, super volatile, just like that. Look at that drop. Tanking right now. So many people are like, oh shit, this last candle was bullish. The next one's going to even be bullish more. And a lot of people probably didn't put a stop loss, and now they're negative. Let's see how many pips it dropped literally in 2 minutes. 990 pips. So you guys got to be very cautious, and this is where you kind of got to add multiple time frames together, because this candle opened about 3 minutes ago. Now we got to break it down to the minute 15 and see how that candle closed. See, if you were looking at multiple time frames, you would have got fucked up, because a lot of people would have known that there's this bearish candle before this one that opened about 7-8 minutes ago, and it retested for the first half of the candle. Like I always tell you guys, usually when a candle opens up, it will go in the opposite direction that it actually intends to go. Boom, fucking tank to the floor. Okay, let's look at the minute 30 and the hour 1 just to get confirmation. So a lot of the time, guys, like I'm just looking at multiple time frames overall, seeing okay, what's going on here, what's going on there. If you are going to be on like the minute 5 time frame, I'm usually going for like 100 to 300 pips. So I'm like in and out of the markets. Once I see a spinning top like that, I'm like, boom, it went up 200 pips, out, close my profits. I'll look for another trade later on in the day, because I'm using big losses, like a 25-cent lot. I'm using a 50-cent lot, a standard sometimes. So if it goes up 200 pips on a standard, like that's 2 bands right there. I'm not tripping on that. Like I'm good for the day. I might take a couple days off just to recoup my emotions, like realize that not every time is there going to be a setup like that. But at the same time, there always will be a setup like that. You just have to be patient and let the setup come to you. You cannot chase the setup. Just like if you go chase a damn girl, she's not going to want that. Girls love a challenge. They don't like to be chased by guys. They don't like guys that are clingy. So if you show them that you have value to bring, they're going to chase after you. The same thing applies here. You need to show the market like, I'm not thirsty. I'm not going to chase you and get these setups, because once you do that and you get in the stage of like trading out of boredom, you're just always going to trade, and that's where you fuck up. You're going to take a loss, and then you're going to get in the revenge mode where you're like, damn, like I took a loss. I need to make back those losses with profit. Lose even more money, then you get even more emotional, then you blow your account. So the best thing that you can do if you guys are ever having like a bad week trading, a bad day trading, get your journal. Get your journal and write down exactly what happened. Maybe write down stuff that's going on in your life. Maybe you were driving in traffic earlier and boom, someone cut you off. And all of a sudden you're just fucking heated. You're like, fuck everyone. I don't want to fucking talk to anyone now. You need to write down, look, I think the reason as to why I went into that trade prematurely and took losses is because someone cut me off in traffic. I was mad. I was aggravated. And then I took those emotions into the market. And by me bringing those negative emotions into the market without getting my mind right before I actually traded, it made me take a loss. So I'm telling you guys, like, I started taking notes of every trade that I go on, do every little thing that I do right, that I do wrong. Therefore, you're going to have all these things built up. You're going to have all this feedback built up, and you're going to know, okay, like a week ago, I got cut off in traffic. I was pissed. I went into the markets. I lost money. I'm not doing that again. If I ever have those emotions, I need to refrain from going into the markets. I need to just be patient, wait for another setup. Like even me, I'm kicking myself in the ass right now. I knew right after this bearish candle closed that the next one was going to be bearish too. And I'm like thinking to myself, damn, like I just missed out on a trade for 665 pips. It's like, I'm going to just wait later on today to get into a setup. I even made profit today, so I really can't be mad at myself. But I just want you guys to really get on your asses. It's not really so much about the technical aspect. Like, I put out so much information, especially in this free mini course, guys. Like, there's a lot of great information I'm giving you. It's you need to be your own trading coach. You need to know like when it's a good time to get into the markets, when it's not a good time. You need to know yourself and really figure out what makes you profitable when you have good weeks and what makes you not have good weeks, things like that. So really just write down, do self-development. I've been reading this book called it's called The Daily Trading Coach right here. Great book, great book. I read it every single night for at least 2 chapters, and it's been teaching me so much about myself that I never knew, like these little things. And one metaphor that they had in the book that I love, that I freaking love, and it correlates so perfectly with us as traders, is it said in the book, if you're driving your car and your emergency light comes on, like the light where you have something wrong with your car, are you going to ignore it and keep driving? Or are you going to pull over and be like, all right, something's wrong with my car. It's probably not safe. You need to be able to not ignore those signs. And we get those same signs all the time as traders. We might be in a trade and we're like, damn, like I thought this trade was going to be a buy, but it's dropping hard right now. It's close to my stop loss, and I just need to either let it hit my stop loss or I need to close right now. Don't lower your stop loss even more and be like, no, it's not going to hit my stop loss. It's going to keep going down. Get to where my stop loss level is at now and then retrace. Just get out of the market. That's the worst thing to do, is trade with anxiety. I do that all the time, or I used to do that all the time when I was using too big of a lot size and I knew I was. And the trade was in drawdown and I was like, fuck, it keeps going more negative, and it just stresses you the fuck out. You don't want to trade with anxiety. You want to know for a fact when you're trading, I know for a fact this setup is going to go the way that I want. That's why you need to be very particular with the setups you get. Be very picky, just like our women, guys. And just like you women out there, you're guys. You don't want to be with some loser. You don't want to be with some bum. You want to be with the boss. Okay, so be very picky about the trades that you go into, because once you see solid setups like this, like bullish engulfing right there, went up. Okay, we have our spinning top right there, followed by a doji, 2 dojis, 3 dojis right there, 3 dojis followed by a shooting star, excuse me, and then it dropped over 900 pips. Spinning top right here went up about 447 pips. So there's these moves all the day. Just looking at the 5-minute chart, like, oh my god, look at these little moves right here. Let me zoom in for you guys. Right here, we have this doji, hit the moving average right after a little retest and went up. Same thing, doji right here, retested the moving average, bink, went up. Let's see how big this move was right here. 531 pips right there in a matter of 10 minutes. So this is solely, we're just looking at the minute 5 time frame. There's other setups all the time on the minute 15 if we bring it down here. We have that spinning top right there, eventually went up. Right here we have like an overall W pattern, support, resistance, support, boom, broke resistance right here, went up. doji right there after it formed that doji drop down. So if I were you guys, I wouldn't go through like all of my videos. You can on YouTube, but I would go through my most recent videos that I've dropped over the past 2-3 months, because a lot of the content that I've been dropping over the past 2 to 3 months is all very new stuff. It's just stuff that I've learned and been working on. But I just want to let you guys know I appreciate you all for tuning into my videos. I hope that we can see an increase on the views. If you guys could just share my channel with your friends and family. If you know anyone that's starting out in the Forex industry and needs help, let them know I got them. Just share my channel with them. It doesn't hurt to tell someone else about it, because at the end of the day, it's only going to help them. You guys can see that candle just opened like 7 seconds ago, and it dropped so hard within the first 7 seconds. But guys, let's kill it. Peace out.